Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, December 6th, 2023. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. Right now, still range bound, very much range bound, trading around the 45.70 level. Kind of an expanding range developing, which means we could continue to see movement to both edges of the range. We have seen a little initial reaction here of prices above 4,600, and today seen a test of prices just above the previous session's high. Bears could be looking here to defend prices above the previous high for a bearish outside day down, and it could be just a short-term bearish day down as it pops back up, perhaps, and stays within range. Now, one thing overall is this market remains very bullish in the short term here. So any pullback, should it happen, could be an opportunity for bulls to defend yet again for another squeeze up ahead until we see a strong rejection. We haven't seen a strong rejection yet, so until then we could still be working our way higher toward the previous quarter's high here, which is 46.34 half. So still in the range right now, building a ton of energy here. We could continue to see movement back and forth as we develop within this range, and right now stuck in the middle at the moment. We take a look here at the NQ. The NQ has developed a narrow range as well here, kind of a rounded behavior, especially if you look at the lower time frames like the 60-minute charts. Rounded top here, very clear support at about 15.8, and again lower highs coming down. This is price right now trading at or just above the previous session's high and coming back below it. That could begin to, again, develop a bearish day from an intraday perspective back down within the range here. But overall, we're still kind of stuck at the range. 16K is the center of the wider range. If it pushes through 16K, it can open up new highs. We have the potential for expanding range here as well, as we're expanding on this side and we're expanding at this side. We could continue to develop this range a bit. Now, if we are to push through, say, the 700 level here and really break, that could open up a return to 15.2 down below. 15.2 is the middle of this key range here, so it's going to be an important zone here to continue to watch. Looking at crude oil, this one's down 0.8% right now. Inverted check mark days that have been playing out here. Kind of digestive days the last couple of days with a downward bias through the previous month's low price now, and looking for a continuation move into 70 and 69.69, and perhaps as deep as the $68 level here, which would be the 100% target from this key range edge. You had that large key range that developed here. You break here, you drop, haven't been able to get back above that key range low, and now working your way down. Overall, this market remains bearish, so bears looking to defend any pullback until proven otherwise. Once we do get down here, though, there could be a strong low that develops. That strong low could give us an end-of-year bounce that could bring us back toward 78 by the end of the year. So again, once we flush out this move to these lows here, there could be a responsive move back up into the last couple of weeks of the year. Looking at gold futures now. Gold here, inside day, 2-day narrow range after a significant rejection at the edge. When you look at this rejection, especially in the higher time frames, the weekly time frame, the daily time frame here, it's about as strong a rejection as it gets, along the lines of what we've seen before at the 2080 level. That rejection right now could be the high, not only for the rest of the year, but perhaps into next year. When we developed that high a few years back, that high didn't get tested again until a couple of days ago. So this high right here was the highest high, and it never came back to get hit until we saw it hit here recently. So that was 3 calendar years later, or 4 calendar years later, 3 years to the date. So that could still be a major pivot high into next year, for example. So any pullback right now could be a pullback opportunity to sell for a return back toward 1950. That's value. That could be reached by the end of the year in the best case scenario. And then from there you could see some continuation down toward the 1825 level, maybe a bit lower than that, as this range basically spans from 1680 up to 2080, and now we're seeing a major rejection at the edge. You get a rotation back down toward 1880, maybe a continuation ahead into 1680 down the road. That's long term, but right now rejecting at the third standard deviation, rejecting at the previous highs here. All of this narrow range compression, failed new high in the days to come, could be outside, and a continuation toward 1950 ahead. Lastly, looking at the YM, very bullish, very, very bullish. Has not really seen any kind of selling pressure that has taken it beyond previous range. This pullback has been within range, within range, within range, within range, all this within range. Very, very bullish. It's about as vertical as it gets, about as intense as it gets on a very short-term basis, sitting above the 8-period average, which hasn't been hit since here, and the crossover that happens here. And with all of that, can it still hang in there and continue to show this type of strength, or does at some point do we need to just digest the move and go sideways? And the pivot range for the new month of trading is super wide. The previous month's range is pretty wide. So again, if we do see a little bit more of a pullback here, expecting some range-bound action, the 35.8 level is going to continue to be very important. If it can't hold that, you have a shot to rotate back to 34.8. 1,000-point distributions have continued to be very useful here. We're at the third standard deviation here still for the year, which is an overvalued situation, but we still have a little bit higher to go before we get the previous year's high. So do we continue to stretch for 36.8? The fact that we're so far through 35.8 suggests that we could very well make one more move up. So this market remains quite bullish. If we did get up here and get into this edge, perhaps that could be a favorable event that starts to bring us back down. But we haven't seen rejection yet, so hard to step in front of this freight train right now. All right, that is it for now. We'll see how this develops here heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.